I want to give you a quick update on what's going on in the world of crowdfunding. I spend a lot of time talking about Israel in general on TV. It's always fun to make headlines based on the work of others. I mean, the prime sense credit goes to Yizhar Shai and all of those investors, but most importantly, the teams who built the company. And what's happening in general now is it's just a golden age to be an investor and a yazam in Israel. Many of us, who've known each other for a while, sort of look back and say, okay, how are we doing? Is this better than it was? Is it the same old, same old? Where are we in the madad? And in my opinion, it has never, ever been so good. I mean, look, the political situation, that's above my pay grade. I have no clue about what's going on with Iran. Maybe I see some guys with uniforms, maybe they know a little better. But I'll tell you one thing, that in this sector of tech startups and investment and M&A and IPOs, it has never, ever been better. So any of you, and I hope many of you, are thinking of starting companies, do it. As they said, who was that? Was that, just do it. That's Nike, but there's this great movie with, I think it was Dustin Hoffman going, do it, okay? Just do it, okay? Because we need to keep on moving. The problem is we can't just sort of, give ourselves a chapeau and say, hey, we're so great, we're so wonderful, isn't this cool? We've got to step it up again. And so what's happening now, and we'll talk a little bit about this, is that Israel is not only continuing what we've done so well, but we're really raising the bar, both in terms of the size of the exits, the number of companies, the dollars that are flowing in, and I think the leadership positions that we're establishing in a whole range of companies and of technology. If you look at the view of Israeli funding in startups over the last decade, it's maybe not a particularly exciting graph. It's up and down. But what's actually rather interesting is you'll see that we're back to almost 2001 levels. We're not quite at 2000 levels in terms of the amount of funds that are being invested in Israeli startup companies. This year, probably about $2.2 billion will go in. The last quarter was one of the best quarters we've ever had. $660 million were invested. Each year, 600 different startups get venture funding. And that's an extraordinary number. That's like 20% of the US total. And everyone says, okay, that's normal, right? Israel, 20% of the US. Hello? Okay, I mean, the US is, last I looked, over 300 million people. Okay, we are 8 million. Even my poor mathematics skills knows that there's no proportionality there. It's not linear. What's interesting about these data points is that 75% of the money is now coming from abroad. So while there are important investing groups or bodies such as the incubators or funds like Canaan Partners in Israel or groups like OurCrowd who are playing a role domestically, the majority of the funds are coming from overseas groups, 75%. And that's, I think, a good thing. I would love to see more domestic money. It's about time that our insurance companies and our banks start investing in Startup Nation, okay? Enough with the Nadlan, okay? Like it's time to start creating jobs, okay? But in the meantime, the fact that people overseas feel comfortable to come here is very, very important. The perhaps most striking development in our ecosystem today is the rise of angels. Angels, by the way, are flying worldwide, okay? You don't have to be a follower of Dave McClure on his 500 startups page or to watch what Ron Conway has done in terms of building his own personal brand. I'm mentioning people who are active in Silicon Valley. You can look at our own domestic angels like Gigi Levy and others who now mamash afchu liot mosadot, they're like institutions. And the numbers of dollars that are coming from angels now approaches, essentially as much money as is coming from domestic venture funds, about $500 million a year. Still, the majority of that angel money is overseas angel money. So overseas angels are coming into this market. And most importantly, as we just saw with the information about PrimeSense, is that it's not just about money invested in the system, but it's about how much we take out at the back end. And the M&A scene, which has been our primary exit mechanism over the last several years, continues to be very vibrant. Lots of money taken out, but more importantly, and lots of deals. I mean, every year, it's again pretty lumpy in terms of the data, but roughly about 50 to 60 to 70 deals a year, which means every single week, okay, there's another Israeli company bought. This year, there will be over 10 deals over $350 million. So while PrimeSense is a great exit, there are going to be 9 others, or probably more. Usually they bunch up towards the end of the year for tax reasons, but that's just remarkable. Last year we had a $5 billion exit with NDS being sold to Cisco, which was their 13th purchase of an Israeli company. This year, of course, we all know about Waze, we know about Trusteer, and the size of these transactions are going up. And again, I want to thank Yizhar and his teams for having improved this. But look at this. This data is striking. If you look at the average price of an Israeli M&A transaction over the last 4 years, the people who used to ding us and sort of say, okay, you guys make lots of startups, but they're all little chiquititos, okay? They're all small, and they're not serious, and you sell them for 30 and 40 million, you prematurely exit, okay? You gotta basically build companies of size. Well, it looks like somebody's listening. And what was interesting about the Waze transaction was their ability to say no, if you believe the rumors, to their original offer in the $400-500 million range, and to push this farther and longer and harder. And I think that in general, the Israeli entrepreneurial cadres or cohorts are thinking, build bigger, build longer, get it to IPO. And in fact, what's happening is that we're now seeing a whole wave of Israeli IPO candidates, not just Evogene, which had a successful IPO, and Wix, but there are about 15 different Israeli companies now that are in registration in the US. We are still number 3. I don't think we can catch China and get back our number 2 slot. But that's fine, because it used to be a real problem when I would speak to Chinese audiences and talk about the fact that we were ahead of them, okay, in the US. And I once had a guy who actually sat in the front row and said, "How many people are you?" Okay, and we started this sort of, I said we're 7 million, because that was several years ago. And he goes, 70 million? And I said, no, not 7. And he goes, 70 million, 70. And I said, no, sir, no zero, only 7 million people. And he simply couldn't grasp it. And so finally, this guy next to him begins to, translate. And finally he says, Mr. Lee thinks you are lying. Okay, how is it? I've been called a lot of things in a talk, but never a liar to my face. And he said, well, if you're telling the truth, how is it that your country has more companies traded in New York than the great nation of China? So guess what? We don't have this problem anymore. The Chinese are ahead. They're going to stay ahead. But let's hold that number 3 position. It's a good and respectable position. When you look at the companies that are buying into our high-tech sector, it's really a who's who. There are, again, 300 different R&D centers in the country. And what these companies who are buying are doing is what I call sort of the potato chip theory of M&A. Okay, take a look at me. I don't sit in front of a bag of potato chips and take one little potato chip. Okay, you gotta go, chafla, okay, eat, okay? And that's what's happening in Silicon Valley, is that the companies are no longer just saying, hey, we'll buy one. They're building clusters. So whether it's Cisco with 13, or Microsoft with 7, or Broadcom with 10, and now Facebook, even Facebook finally has now said, you know what, we're buying Onavo and you're staying. And we're setting up an R&D center, and Amazon setting up an R&D center, and Apple finally having set up a big R&D center, and now bolting on other companies. So this, again, is very important good news for you guys as entrepreneurs when you're thinking about your startup and your eventual exits. So let's talk about crowdsourcing and crowdfunding. We all have heard about this wonderful innovation, the wisdom of the crowd, that wonderful experiment where they put a cow on stage. Have you heard about this? Where you basically put a cow, they brought a cow into TED. Okay, and somehow the crowd gets it right because there is a certain inherent wisdom in the crowd. So, although by looking at Kickstarter and Indiegogo, I'm not sure, okay, how much wisdom. It's a big business, but we all know now that this is somewhere north of $5 billion, I think closer to $6 billion this year. There is real business in particular. And the biggest part of this business now is the peer-to-peer lending. Canaan Partners, a little secret, is about, you think that PrimeSense is going to make money for these guys. Their biggest exit is on its way, a company called Lending Club, where I'm lucky enough to be an angel investor, tagging along in their wake. This is a company that basically lends money person to person without a bank. And last quarter, and this is public data, I'm not sharing anything private, that company lent $650 million. The last reported equity investment was at a $1.6 billion valuation from Google, and that part of the business is booming. There's, of course, the Kickstarter, who has now got over $1 billion of activities on their site, and Indiegogo. And finally, it comes to the venture capital type, or the what's called equity crowdfunding, and that's where we play. And I came up with this idea a little over a year ago, and we actually launched the site, OurCrowd, in February. And I'm very proud, and I'm going to say this as much as I can, as long as it's true, and hope it'll be true for a long time, to say that today we are the world's largest equity crowdfunding site in terms of money actually invested. And that's by virtue of you guys and the quality of the deals that we're getting, as well as the passion around the world for investing in Israel. We're competing. Yes, we're competing with some serious people in Silicon Valley, people like Funders Club and AngelList and others. But if you actually look at the dollars that have been invested, we're ahead of these guys. The crowdfunding is heading up and to the right. They're talking about a growth in this industry of over 100% next year, so there'll be about $10 billion in the crowdfunding economy. We hope that our area, in terms of equity crowdfunding, will probably grow between 300% to 400% next year. I mean, right now our business plan is calling for us to triple. If you look at what's happening in terms of the competitive matrix, we've again now actually raised over $26 million for 30 different companies. We've become the most active investor in Israel in our first year of operation, and it seems to prove that this new model has a lot of legs and room to grow. One of the things that surprised me is how many deals we've done that have been over $1 million. This is no longer a toy, right? We're not just investing $100,000 or $200,000 or $300,000. We have essentially, including those we've completed and those are in process, we have 10 deals over $1 million out of our 30 deals. So this is starting to be a real tool for raising significant capital for companies. We have, I think, very, very high quality deals and a great portfolio. The idea behind our model, and there are many different models in the crowdfunding, you might have been reading about the regulatory developments with the SEC, where they've just literally about a month ago put out new regulations to allow broad-based crowdfunding so that anybody could go in like a Kickstarter and put $100 into a startup, and then you'll aggregate this all. This is going to be very complicated and full of all kinds of regulation. We're not doing that. We're doing what's called accredited investor crowdfunding, which means in Hebrew it's a mashkia kashir. Okay, in other words, you have to have a certain minimum net worth or annual income. Each country has its own distinctions and regulations for where that cutoff is done. Here in Israel, we are completely out of control in terms of the numbers. K'dei liot mashkia kashir, you have to have 14 million shekels. That's a lot of money. Okay, and it makes no sense, by the way. The U.S., which is pretty kapdani and pretty draconian, it's only $1 million. So the last time I looked at the shekel dollar, we're asking for a lot more. But in any event, we do this in order to make ourselves legal, and so we don't have to go to jail, which is obviously an important thing. Okay, because we're not selling public companies, right? These are private fundings that you're doing. And we're trying to essentially combine the best of venture capital with the best of angel investing. And the idea is that unlike Kickstarter, any one of you want to go on Kickstarter tomorrow, you take a cool video, you write 500 words, you come up with some t-shirts or promises of t-shirts, and push the button and you wait for your money to come. Now, obviously you have to do some priming and you got to, distribute it in social networks, but that's basically it. That's not what we do. We, like venture capitalists, because that's where my background and my team's background comes from, we select deals that are submitted to us. And out of every 100 deals, we'll take 1 or 2 deals. And then we put it up on the site. And then we allow angels to essentially aggregate through our site, and they come from all over the world, and then we write a single check to the company. So what's happening is that on the one hand, the individual investor gets the freedom and the discretion of being an angel investor, whereas the company gets the single check. If you've ever tried to handle 20 or 30 or 40 angels, chaval lazman, okay? It's just like such a nightmare, because all of a sudden you need to do a new round. You have to lachtim et kulam, okay? You got to go find somebody who's on a cruise in Alaska and with a sat phone, okay? You know, got to sign because I'm going to lose the company, you know, and it's, believe me, I've been there. But we are one check. We take all this money and we put it into a pool, and then we manage it. So it's both curated on the front end, and then on the back end, we're supporting the companies, because it's, as you guys know, the money seems really important, but the money is just stage one. If you're not going to get advice and people sitting on your board, and you're not going to get help with meeting strategic customers or partners, you're not going to get help hiring in the press, and everything else involved in properly mentoring and working with a company, then you're getting dumb money. Anybody who just gives you a check and says, vaya con Dios, my darling, I'll see you later, okay, you know, good luck, you know, inshallah, you know, whatever it is, okay, screw it. Walk away from that person, okay, because that's not what you need. You need people who will be more of an ezer kenegdo in our old tradition, okay, somebody who won't just be a, you know, yes dear, wonderful, and give you a lituf all the time. You need someone to give you a slap every now and then, as we do. No, anyone who's married knows that. But in any event, this is our model. We have a, you know, it looks like a normal venture model with an international general partner, management company, and then again, we aggregate those accredited investors into the special purpose vehicles. The way that you as individuals could go to our website, you can accredit, you can browse the offerings, get to review the diligence. We put the diligence up. If you're not ready for that kind of disclosure, then we're not right. There are some companies who say, wait a minute, you're going to take my business plan and like calls you've made to my customers, and you're going to put them up even to a restricted group, but there are thousands of members. I'm not in, and that's fine, okay? But today, my sense is that this kind of disclosure does nothing to hurt you, and we're very careful about making sure that we're giving enough information to our members to make decisions, but not too much to hurt you guys. Then you get to invest, and you actually push a button on the website. Maybe I'll show you. So this is what our website looks like. These are some of the companies that we're funding right now. You get to, if you want to actually drill down and look at a company, and this is an interesting, I'm doing this as part of an academic exercise because you know, I'm not just, this is not a solicitation to invest, okay? I want to make sure that we're all understanding that. Now, does that look like a machine that will be crowdfunded? This is Benny Landa's new company, okay, which is pretty exciting. And we're now crowdfunding for this company. If you want to see, you know, the video, you can obviously see the video. You can look at the company presentation, okay, which gives you all the way that this company, you know, is this is basically bringing sort of digital to packaging. Would you believe that today in the press area, when you want to get a box, like think of a Coke box that, you know, has those 6 bottles in it, they have to put wood into these machines to create folds and pressure and stuff. This is now making it all digital. It's taking a very analog process in the packaging industry and making it digital. You then get to actually see what the deal terms are. I'm not going to show you this for a long time. Maybe I'll just, okay. And then you get to read our take on this, which is you know, what we think about the presentation and the company. And this again is where we put the various information up. You get to actually listen to a webinar. We put up a webinar, you know, with the company, et cetera. And then if you want to invest, you literally go to a button and you click. And I remember when we sat down and designed this, someone, you know, a lot of our people said, no one is going to invest on the web. Okay, come on. It's one thing to send $50 to Kickstarter, but our minimum is $10,000 for a given investment. If you can't invest $10,000, you're not part of the deal. And they said, no one's going to do it. Who's going to sit there? And I remember after we launched, it took about a week for our first investor to come and click, somebody we didn't know. And he clicked $50,000. And there was this debate whether it was a joke or real. And within a week, the money was there, and now it's $26 million later, and this stuff actually does work. So that's a little look at the site. These are our milestones. We've been really growing. We now have 2,300 mashki'im kshirim who are connected. We hope that by sometime like this time next year, we'll have 10,000. We're trying to build this thing aggressively. This year, we'll have invested about, by the end of the year, $30 million. Next year, we're hoping to get to $80 or $90 million of invested capital. And again, to give you an idea of how big that is, if you are a fund of $500 million, which the last time I've looked here in Israel, we don't have any more $500 million single funds anymore. We used to, but not anymore. And if you have a $500 million fund, you typically hold back for reserve and follow on. Yizhar, want to help me out today? 40%, 50%? 60, let's say 50. So that means you hold back 250 million, and then you invest the 250 over a 3, 4, 5 year, typically let's say 4-year investment cycle. So if you are a $500 million fund, which doesn't exist anymore, that means you're investing roughly about $50 million a year. Next year, we're going to invest, God willing, $80 or $90 million. So what this means is that if we're able to pull this off, and this, of course, is sort of a bold move to talk about this when we haven't done it, this is part of our business plan, we're going to totally change the way that the funding is done in this country and around the world. And this is really, how is it possible? Because there are $45 trillion in assets in accredited investor hands. No one's ever put that money together. That money's been frozen out of this whole thing, and we think that this can provide just a huge amount of additional energy and funding and support to the startup economy in this country. We've got a great team. Elon Zivotofsky, by the way, is the guy you should bother if you would like to get funded by us. Okay, Elon runs our deal team together with David Stark and a bunch of other people. Penny, you might know, has been a very successful entrepreneur in the country. Stephen Blumgart's my partner from Glencore. We have a great team. We actually have 3 out of 9 of our partners are women, which makes, I think, we are the highest percentage of women partners of any venture organization in this country. Okay, I'm glad to see actually here there must be at least 20% women, which is highly unusual. Okay, and we have a real problem in this country. Every time we talk about bringing Haredim and Arabs into the high-tech story, absolutely true. But don't forget the women, okay? Because today, if you look at the numbers in Silicon Valley, only 6% of partners at venture funds are women, okay? And we have a huge problem which we have to address. We're bringing, I'm putting up 6 men mentors there, okay? But in any event, we have, so any women who are appropriate, please come to me. But the bottom line is we use these mentors to sit on our boards because we take board seats on the companies, we support them. We have a great group of people who are helping. We look for in the companies, we look for great teams. We look for companies that are addressing really fast-growing markets, things that are easy to understand. If it's too complicated and we can't explain it in a couple of sentences, it's not appropriate for crowdfunding. We look for companies with traction where we can actually point to things that are happening in the company. We look for sponsorship. We like to invest with other VCs. Okay, in other words, this is a group sport. Ze mamash mishak futzatit, and we like other people investing alongside of us, and we like mitziot. The portfolio consists of 30 companies and counting. We're doing almost a deal every week. These are some of the companies that we funded. The ones that are in blue are actually serial entrepreneurs, people who've had successful exits, and we like those guys a lot. People like Amit Gopher from Argo, where we invested, luckily, about 2 months before Yaskawa, the big Japanese robotics company. This is the company that makes what's called Rewalk, which is the exoskeleton for paraplegics to get them walking again. Zvi Schreiber has had 3 exits. We've now co-invested together with 2 other major venture funds here. We were in their first. Bob Rosenshine, who's had 2 very successful exits. We invested in his new company. At AE Squared, which is actually now called Native Flow. We've invested together with JVP, and these guys together have had 3 exits. Zula, which of course is Jeff Pulver and Jacob Nerdavid. We've invested there. Microsoft has just joined us. Richard Dem from Abe's Market, which is a spectacular company selling organic products right now in the US, but someday globally, sold his first company to Goldman Sachs. So what makes this interesting for us, and I'm sorry that didn't, there we go, is that we have actually started doing 11 different follow-on rounds. What's critical, and people asked us about this platform and said, well, how do you can crowdfund, I get that, okay, you'll raise money, but what happens when the company needs more money? And you look at how many of these follow-on rounds we've actually done at UpRounds, that's a very, very good part of our business. And we're focused on crowd building, which is that not just do you get the money to the guys, but you got to help them. And we're essentially mobilizing all of these entrepreneurs and investors who are part of our network to start helping the company. In fact, one of our companies now is closing a $10 million round, which was introduced, the fund who was leading it was introduced by a $20,000 investor. That person made the introduction, so this crowd building stuff really works. These are some of the funds that we've co-invested with. A lot of really good names, and we're delighted that Canaan and others are up on these lists. We've announced a strategic co-investment agreement with General Electric. General Electric, and I know that one of my partners here is here in the audience from GE. They are just a dream partner because this is not only one of the most admired and respected companies in the world and a symbol really of innovation and how a big company, and it's really a big company, can agree to move fast the way that we move fast and to go early. That is just, I think, a great sign both of the fact that crowdfunding is real and how progressive General Electric is as a corporation. We've now launched a portfolio reserve product, which is a way to buy the portfolio. The press has been very, very kind, helping us get more attention. And we're growing, again, very, very fast, both in terms of our dollars as well as the number of investors in the platform. And ultimately, this is about our commitment to the community. And we've made a decision, and we're the first, I think, in this country to do it. There are now some others who've actually announced that they're following us, which is that if you want funding from our platform, you cannot approach us and you cannot take our money unless you are making a commitment to give back to the community. And someone said, wait a minute, how do you do that? The charity has got to be voluntary. And I said, not here anymore. I founded this company, I've got a team, we can make the rules. And with us, charity is not voluntary. It's a mandatory thing. If you're not willing to give part of your upside back, and we're using Tmura, which is the Venture Philanthropy Fund, as our partner, then you can't get money from OurCrowd. And so every one of our companies is making a commitment. We're not telling you how much, we're not telling you where to send this money, but if you're not going to give something back, then find money elsewhere. And we're very focused on that, and we hope that that will continue to be what we're about. So in summary, we're trying to pioneer a new way of investing. So far, our results this first year have been really surprising to us, and the next year is going to be really challenging, and I hope to be able to come back and share with you some results from next year as well. So thank you guys to the Recanati, and I look forward to meeting you.